Hi there and welcome back. You're watching Dukascopy TV. I'm Darren McDermott. I have Jean-François from MJT today to have a look at the usual suspects in relation to the correction that was initiated last week. Welcome.
Hi, thanks for having me again.
So tell us, what should we be watching out for this week and what sort of trends are we seeing?
Okay, well, last week we were saying, and we're on the daily charts here of the standard mosaic that we look at each week with euro dollar, cable, Australian dollar, gold, dollar Swiss, dollar yen, 3 months S&P futures and 3 months treasury futures. And last week we were saying that the stronger markets, i.e. the euro, the cable, the S&P, were basically still in an uptrend, but we're getting to points where we could expect an intermediate top. At the same time, you had the weaker markets, which were in a correction up, Australian dollar, gold, and treasury bonds, which we labeled as the liquidity-driven markets. And basically, they were coming towards important resistance levels with the head of our corrective targets. And so we're also likely to see at least some work around that resistance or a correction. And so that's basically what we saw last week with most of all these assets correcting for the most part of the week. Now we're going to have to look at them in detail, and we're going to first have a look at the euro. And so if you look here, we have an investor's view. So an investor's view is a weekly, a daily, and an hourly. And you can see the combination here. The weekly is the long-term chart, the daily is the medium-term chart, and the hourly is the short-term chart. And you can see here it only corresponds to a small portion here of the weekly chart. And for now you can see that the weekly is still heading up, it's out of a base, and it still has quite a lot of potential measured on our volatility, but it's still early stages, and so the uptrend is confirmed, but it's probably not a very strong uptrend yet. If you look at the daily, it still had a bit of potential, but we were getting towards at least the timing of what could be the end of a move. Now, the targets are hinting that there's probably more potential behind it, but what we saw last week is that we had strong exaggeration on the risk index, which was in the overbought territory, as well as our two envelopes touching each other. And so in that respect, we're pretty much where we could have expected a correction down. Now, if you look at the hourly, we were looking at corrective targets around the low 136 level. We did go down to them and through them. It was quite an aggressive correction. Once we turn impulsive, meaning we go below the corrective targets, as we have done here, there's a strong likelihood that the impulsive targets will be reached. And these impulsive targets are in between 133.51 and 134.63. I think we briefly touched these levels this morning, I think. But and all in all, there's still potential down, and it's still about, I'd say, a week to 10 days to go. Although the envelopes are touching each other, the risk index has just entered the oversold zone, so there's no true synchronization yet, so we think this move is not over. Now, if we turn to the other assets, and I'll probably, I won't focus too much on cable because it's very similar. So you're here in what is a sideways movement for about 2 years now. The daily was still up with potential, but also in a strong exaggeration, and the hourly has started his move down. There's still some potential here also. Maybe we'll watch the levels towards the 158, 157 levels, and also starting to be in an oversold situation, but it's only the beginning of it. So there's still some potential down here on cable too. Now back to the mosaic, and let's look at gold. Gold has had a lot of hype over the last weeks. People saying that it was moving higher. We have had problems getting too excited about it because our weekly is still quite negative here. Our weekly chart is still in a bear market. It is in strong exaggeration over the risk index, but for the time being, no coordination with the stress of the envelopes. And so our targets are still towards the 1,000 level over the next few quarters. Now, it's true that the correction up that we had was quite compelling and was hinting to go higher, but we never really made it above the corrective target. And so it rolled over last week, and we still have impulsive targets as our main projection here. So the two together do hint that for the time being, the downward trend hasn't been attacked yet. And so we'd still be negative in accordance with what we see on the weekly. What would bring an acceleration of this move, and maybe this is a strong support for the people that are bullish here, is basically making it through our corrective targets. And our corrective targets are around 12.95. So as long as we stay above them, there's no real sell-off in gold in our sense here. Now, if we were to go through it, we would again see it as a resumance of the trend, which we could see here on the daily and on the weekly. Now, Australian dollar is similar, but it hasn't rolled over yet as much, but it also had quite a strong, it hit a strong resistance with the corrective targets here, and has also turned impulsive on the hourly. So let's look at dollar Swiss. It's pretty much the inverted story than what we see on euro dollar. Dollar yen is perhaps quite interesting because all along it has been in a consolidation since the month of May. This consolidation has really not had a very strong acceleration down, and we can still see here it's been very flattish and the trends are still up. And this trend is confirmed by the long-term trend, which is still showing a potential towards the 110 region, and maybe for another few quarters to go. There are some exaggerations, but at the moment the trend is still up and has been not dented by a strong corrective move on the daily. What we can see here is that on the hourlies we might see the beginning of a new acceleration, which might lead us out of this consolidation pattern. It hasn't really happened yet, but it's probably in the making, and we would think that it has a good probability to happen. So dollar yen moving up again and could break out. Now, 3 months S&P future, it has been the stronger one of the markets last week. It's still in an uptrend on all three frequencies. As you can see, we are in levels of exaggeration here on the weekly, on the daily, and on the hourly. And we believe that some consolidation could follow in light of the other assets. During this week, we have also reached here exaggeration zones. We're still quite constructive on equity until early next year, but an intermediate consolidation period is possible. Finally, on treasury bonds, and basically our proxy here for liquidity in the market, giving all the news about taperings this year. Well, we're still correcting down at the moment. So the weekly trend is still down. It hasn't turned into an impulsive sell-off, but it has had quite some volatility over the last few quarters. So still trending down on the weeklies. On the dailies, the trend was still down. It had a correction up. It didn't really make it above the corrective targets. It seems like it's rolling down again. So we think the move on the weekly is not quite over yet. And this acceleration is not quite there yet on the hourlies. We would need, as with gold, to go through the corrective targets here, which are around 133.39. So as long as we stay above that, there's a chance that they might have another go at reaching the corrective targets on the daily, but it seems like things are rolling over, and watch out if it goes below 133.39.
Jean-François, thank you very much.
Thank you for having me.
And thank you for watching Dukascopy TV. If you are interested in watching more programs on technical analysis, make sure you also have a look at our targets and focus. But for now, goodbye.